Here's what moved markets today. Geopolitical tensions in the Middle East intensified following a brief period of diplomatic optimism, with oil prices rising sharply as renewed uncertainty affected energy markets. The reversal of Friday's constructive sentiment drove commodity prices higher and pressured risk assets. Bitcoin declined below the $74,000 level during the session, with the price movement occurring despite continued net inflows into institutional crypto products. The pullback reflects broader risk-off positioning across markets in response to deteriorating geopolitical conditions. The SEC included digital asset regulation among its stated priorities for 2026 in recent agency communications. The statement signals continued regulatory focus on cryptocurrency market structure, custody standards, and trading platform oversight frameworks. Haywood, the parent company of cryptocurrency exchange Kraken, announced acquisition of regulated derivatives platform BitNomial for $550 million. The transaction expands Haywood's federally regulated futures and options capabilities in the United States market. Rave token experienced a 90% price decline in a single session, as major exchanges Binance and BitGet disclosed ongoing investigations into the project. The severe sell-off reflects market response to regulatory scrutiny and exchange due diligence processes. Strategy executive Michael Saylor discussed plans for additional Bitcoin treasury purchases in recent statements. The commentary reinforces the company's continued corporate accumulation strategy through its various capital-raising programs and convertible instruments. Looking at this morning's price action as of 9:55 Central European Time, market structure has shifted decisively negative. Gains are minimal, CC up 2.89%, Eigenlayer adding 2.32%, and Wormhole gaining 1.79%, with upside barely registering and limited to just 3 protocols. On the downside, selling pressure is substantial. Moonbeam down 10.79%, MON off 6.72%, and Hyperliquid declining 5.36%. Double-digit losses in smart contract platforms with mid to high single-digit weakness across recent outperformers, with downside significantly outpacing the minimal gains. The pattern reflects a sharp reversal of the multi-session risk-on trend, with yesterday's positive asymmetry completely flipping to favor the downside. Market conditions show meaningful profit-taking concentrated in protocols that posted strong gains over recent sessions, suggesting the sustained constructive positioning may be giving way to consolidation. The Crypto Fear and Greed Index declines to 52, pulling back 3 points from Thursday's 55 reading, but remaining in neutral territory. The modest retreat reflects today's negative market structure, where double-digit losses dominated while gains barely registered, marking the first significant reversal after multiple positive sessions. Sentiment has retraced from the 55 to 56 range back toward the 50 midpoint, though the index maintains its position above the fear threshold at 40. The pullback demonstrates continued sensitivity to profit-taking and market reversals, with psychology quickly adjusting when yesterday's positive asymmetry flips decisively negative. The decline to 52 tests whether the recent stabilization in the low to mid-50s represents sustainable neutral sentiment or another temporary positioning before potentially reverting toward fear. The index remains constructive overall, though today's reversal highlights the fragile nature of improved sentiment when faced with concentrated selling pressure in recent outperformers.